Welcome to a hashtag crypto trading video for today, Wednesday, October the 25th, 2017. Everything you do is within your own risk, own reward, which is always the case within this game. When you do information, I'm just using this JSNP4 video from a while back, stay away from hit BTC. Seems to be a pump and dump only exchange. Seems to be. And then what it is. Oh, there's pump and dumping going on there for sure. But every exchange incurs such. And pump and dump, that can technically be profitable for players like myself that doesn't even know it's existing. Let's assume this is just some random code you decide to get into right now. You buy now. So we're going to buy in here. And we'll place a buy order here. We'll place one here. We'll place one here. And why not here? We bought a bunch, so we can place some sell orders in. And we're out. We have no more tokens left. Okay, so then the game's going to continue. And markets are going to move as the markets are going to move as they usually do. And during this time, 2 orders were filled. So within this buy order, maybe one might say, you know what? I'm just going to put a sell order way higher because after I filled this buy, I'm still not too far away from here. I could sell up here, but I don't want to. And then, oh, you sell here. Well, let's buy back here again. And then boom, down she goes. You get a bunch of buy orders fill. Not this one. Let's put, so we have how many? 3 that get filled. You put one here, maybe you put one here, and you put one even higher. And then the markets come in, and you got some sell orders that got filled, so you're going to place them below, but they're not going to hit because the pumping stage comes in soon, we'll say. And you don't know what's happening, but and there we go. Every single sell order that's been reached on your play would be hit. Assume you have some higher, but this thing ends up doing something like that. Well, as the market was going higher, you're going to be placing buy order, buy order, buy order. So if you look at how you would play it, at least how I play it, this one will go here. This one will go somewhere here. Just buy. And they pretty much would all hit. So even though it's pumping and dumping and you're buying at this higher price, well, it's overall, when it comes back here, you're going to be in a lot better shape here than you were back here. And then if the market does something like this, you'll be a lot better off here than you were back here because of the gains that you made. Here are a few random codes: Ethereum, Dash, NEM, ETC, LITECOIN, SC, SIACoin. There are several coins of this nature on sites like this. And you can't pump and dump these codes on that site because the price has no choice but to move up and down within how the markets are traded everywhere else. Maybe a little bit higher or lower than normal, but always within the area. There's no chance that Litecoin is 15% higher on another exchange unless there is major capitulation or major pumping within the entire market at that short-term time frame. Let's move on to Bitcoin. And I'm brought up that exchange for a reason. And something I've been shying away from doing is trading Bitcoin against the dollar. And I'm thinking more and more that I probably shouldn't. Because on that same site within HIT BTC, one of the advantages in which they have compared to Bittrex is a 0.1% trading fee, which becomes very important in situations if you're, say, looking to pretty much short the market in the mechanism of buying US dollar tether. We'll say it's 56.05. But you want to buy back at the neckline, we'll say. This is just day trading kind of stuff. Okay, so 55.30. The difference on this is about 75 basis points or so. And on 5,500, that translates to about 1.3% profit. 1.4%. And when you're paying 0.25%, which is what Bittrex has, it's 1.5% on Poloniex, so a little bit better there. But it really does hurt away. If you're looking for a 1.5% play and you're paying 0.5% profit, now it almost becomes a losing play long term because you're paying way too much in the vigorish. But in a situation here, if you're going for a 1.5, 1.6% profit and you're only paying 0.2 of it, then it becomes very easy to make these kinds of plays. Now, the reason why I'm saying this, and you see a trend, and maybe it's the last time the trend happens, but I have seen probably about 4 or 5 short-term inverted head and shoulders pattern. And usually they all work for one leg. I don't even know if I've seen a second. It has now just broke this neckline. Isn't a clear break. Clear break would be closer up to here. But it has just broke it. The last time an inverted head and shoulders pattern occurred, so it had one leg higher. And that was it. I'm going to change the time frame in a bit, but the move just occurred back in here, adjusting to the message of the market, understanding how the story comes into play, and what the short-term story is of course a break, as I was stating, not a clear one, of the inverted head and shoulders pattern. Meanwhile, it has done a very good job within this support. It's looking like it's now at the time where the 18 average of closes is pretty much the number. When you see it right in the middle like this, you can pretty much assume the 18 average of closes is dominating. And it's got a little ways to go short term, but it's also the key note of understanding of the high-low situation of building the stair steps. There's that next stair step, you're going back down. Is that the case? Because of course short term, if it isn't, and it already made a statement that it was going to break out for at least one leg on an inverted, and it doesn't. You see price action in here. You could pretty much make an assumption that 53 3/4 would probably be the test coming in the near term. Within the 15, left, head, right, and a very small leg higher. And this hasn't been the only one that has been shown. The actual market in the whole within this has had this support on the 24th at 56.10, resisting it at this current stage. So it's had this type of rectangular box after falling in here. Now it's got, we'll say, this sort of one in here. And its current play is a test within the 18 average. An inverted head and shoulders talked about on the shorter term time frame would bring a test again up to this previous high and maybe make a cup and handle style formation, with this being the cup and then a handle. And of course you can make another case of what that image would look like, but that's obviously not here or there. On the single hour time frame, however, the market has had a sustained pattern of lower highs and lower lows ever since the trend was reverted in here, as support was established back to the band and the break of support, resisting the, well, yeah, I guess there wasn't much of a trading support platform in here, but it did resist it, and more importantly, it resisted towards the 18 average of highs, establishing support, weakening its established support, And a lot of optimism after a rally up to here, but you can see this is where the key support level, somewhere around here on any pullbacks, and it didn't do such. Therefore, because of that, that really makes it tough to think that, like I said, either this low is going to go right through it, which it did, or you would bounce here and do something like that. And of course, it just bounced through it. But you get those indication telltale signs that you were supposed to be supporting this 18 average a little bit better. And even when you look at it on a candle by candle, period by period basis, you can see that the one that came down to the 18 average of lows then retraced at least close to the 18 average of highs. And now, after making a low test, you kind of, if you're making the highs, want to at least support the close, which means somewhere in here. And then the big red candles down, resisting this area, and everything's occurring. So if it's going to be another leg lower, it looks likely that it's going to resist this area if a fall is to occur. Trend line analysis is kind of obvious in here that there's a noticeable trend line. You got to obviously, I like to put it also in with the other support line in this case. So this hits this point 2, 3, 4. It pierces this for 5, comes close here in this 6. It hits it many times. A lot of more people would see it. It becomes more time to see it, more obvious to see. And even without looking at trend lines, it's obvious. It's easy to tell some breaks here and there. So this is a situation in which if there's going to be a leg lower, will it meet up within its period within this declining 18 average of lows? If there is a break of significant portions below here, I'm not going to, you definitely don't want to sell or sell short. But it can oftentimes mean if you're breaking below, you're going to get continuation of big moves lower. That will at least come with a V-shaped formation most likely if a major break of this support line occurs. And like any type of situation, a major break of resistance, you can have it in here like this, but it's always going to come down to me to this 18 average and how it supports within it. All right, then let's continue on further. We use the 4-hour next, which has had several periods with difficulty upon the 18 average of lows. But every single time it retraces well below it, it doesn't go much lower and usually makes a move back to the 18 low. Market, as far as reversal of trend is concerned, a band flatten out, established support. See, this is not deep enough to count for me, but it's an obvious the band was flat for reversal of trend. Okay, support established. Now you need to break it. I mean, it didn't happen. Continuation of the bull trend. Not by much, but continuation. And here, band flatten out. And I'm not going to count this one. Established support in here. It does come back, not only to the band, but the 18 average of highs to validate it a little bit further. And the break, clear break, maybe at the bottom, but it obviously would have worked, say, to sell short here at this time frame, barely, microscopically, and then to keep on holding. But we're looking at like maybe 55.30 was the short area. And it has been continuously declining this area without any types of solid moves to even get close to starting something nice. So therefore, it's got a few steps just to get into really good shape within this. And it can happen fast, but it's got to get up to the 18 average of highs to at least attempt to neutralize the situation a little bit better. And then above it to attempt to regain the bullish market. So an example back in here, this happened fast. A move from here to here neutralized the situation. It eliminated that down major bias possibility. And of course, thinking ahead of the situation was a possible failed break. And then in here was that attempt in the regaining. So I like to look at it within that point of sense. And like I've been stating on the other shorter term charts, the break of these key support levels, it looks to me that the daily chart does show it best that 4,900 to about 4,500 is going to be any key areas. If there's serious breakdowns, I talked about this trend line break, what's going to happen. There is probably a small area of support here in at around 51. 5,000 psychological means nothing within this chart other than on the longer term time frame or the daily chart, which we'll put on the screen now. And what I can do, looking back at the August and late summer highs, is draw this little rectangle in here, somewhere around there. This was the area of this high, roughly around 49.80. So that's what gives that 5,000 some validity. Short term, it has nothing, or my short term analysis, it means nothing. But here it does. And then oftentimes when you're coming back to a key area, you got the high and low end area. So the high end is here, the low end is down towards here, which represents the highs in here, represents this congestion area. It represents these highs as well with the liftoff point. So it's the key area it's going to go to if there's going to be a decent move, which would, of course, force this 18 average to go sideways and lower, as was the case in here, which would thus mean now a test within the 18 average on the weekly chart, something that I've been talking about as well. And as I stated in the 2.5 minute warning, here we stand at this 18 average, and I've seen it plenty of times before when the current trend has something like a few periods down towards such. It just happens to be the bottom and it just goes higher. It's like it's magic almost. And then you follow through. Maybe you might get small pierces below. And if you did buy at the 18 low, you might encounter some short-term losses. Let's assume you bought it in at, say, 55.10. Maybe later today into tomorrow, you see the price action at 53.54, 53.20. But as 6-7 days go by, you notice it breaks the 18 average of highs, and then it breaks this resistance because it's most likely, if it does rally up from here, from the 18 low, that it's not going to encounter much resistance at previous high. If anything, you're going to encounter what you did the last time. There was a couple of days in here. That would be the likelihood of the resistance on a situation of a break from this point on the low. Now within the weekly, the daily chart, there's that great buying opportunity. And I like to think that the 18 average of lows within an primary uptrend does a very good job. And on the weekly time frame, it's just been phenomenal lately. This one here, quick move higher. And here's that situation where, say, if you bought in here, you suffered within the day some losses, but as long as you didn't stop yourself out. And here, you were break even for a few days, and in here, you were barely profiting for many days, and then you were doing well. And that is what has been very interesting within such. But where do we stand now? The 18 average of highs is now at this previous resistance. So it's in at about the 48 level. The 18 average of lows is broke the 38 handle, rising. And that means moving into the next week, this number will probably move closer to even over 4,000 even. And it makes sense that if it's going to hit, say, 45, 46 area, keyword if, that it would do it in a little bit of time, well into November. And when you look at this from the whole, because it barely has been any discount at all, and we're looking at this from this point, good green candle up, pretty much a pause candle, but it actually had an up week. Then a very good candle up. So very good up, satisfactory up, very good up, and another satisfactory up like the one in here. But it has had now further sideways retracement. It's, I guess, getting a little bit of breath, and it could go anytime it wants, and it's not a surprise. And it would be probably a decent size move up to most likely in here, but there's definitely reason to think that if the market does go lower, it's nothing wrong with it. It's doing its thing. It's keeping its bullish trend. I don't see anything wrong with the system itself as far as how the network of transfers and trades and everything is working within the crypto space. This is just humans buying and selling within this market, and it's moving as it normally has for so many times. They've always go up and down. And when you look at key highs, they're so easy to distinguish after the fact. So if this happens to be the high, we don't even know this yet because it's got to at least make a move to the 18 average or close to, yeah, at least to that for me to say that a low is coming, meaning it has hardly retraced on this time frame. And therefore, if it does make a move within the 18 average, it's always, by mathematics, has to make the higher low. And it's also a good reference point to situations where you can expect that the buyers would probably come back in control. So if they don't go down and you see price action above, I would expect a large push higher in time, meaning maybe a 500, 600, 700 gain in maybe 18 to 40 hours, something of that nature. Now let's quickly look at the altcoins. LITECOIN, it had its big move after the fork, and support test is now in play. This is big. This is big because now to distinguish if this rally is real, it basically can't fail this support test. So it can't hold and stay below the 18 average of lows. And any big move below it, where if noticeable, I would expect either continued depreciation or a move up to the 18 average of highs with high probability of it falling over there after that. And here's a case with Ether, which has managed to have its correction in through that of time. You can notice a descending triangle, which now means it is nearing what I've called D-Day, decision day. And I call decision day when you're at a time frame when a big move to either direction is at a major climax point to be coming soon. But also within such, if there's really three moves possible. It's not two. Clear break below, a significant test up to this high, and even a possibility to break that. Those are two. And the third one is continuation of a sideways rectangular move. And it's kind of tight as far as this size right now that oftentimes maybe it might have to be or reach one a little wider, a little less tight. But as far as the 18 average is concerned, it's going to be the same thing. I need to see this 18 average of lows and the support at least hold for because if it doesn't, then you're looking at another failed breakout, and this is a pretty decent sized one, which would have a significant leg lower on these codes. And I think a lot of the alts would share the same thing. I'm going to conclude by just mentioning about these. If you want to set them up on your chart and you look for moving averages within the indicators, I use weighted average. It's front 8 weighted. It means it takes more value for each recent period and less per preceding one. And I use the highs and the lows. So I'll click on it twice and then I'll edit it to go 18 high, 18 low. It already comes, I think, in the default color blue, but I like a blue color with it because then I got 3 distinct different colors within green up, red down, and then the blue on the correctionary phase. So that's how I like my charts. I really haven't done much to change them, and I don't like even adding stuff like a 200-day moving average or much more than that. A better Fibonacci mark would be okay, but without that, I can calculate it when need be. And this, to me, works as my ultimate favorite indicator, as you probably know. Thank you for tuning in, and have yourself a great day. Bye-bye.